Guys, again, time to take a closer look to impulsive waves under the Elliott wave theory chapter. Impulsive waves are the thing that every trader that uses Elliott waves theory is looking for. More exactly, out of the 5 waves the impulsive mover is formed, the third one is the one most searched or desired for each trader, because in an impulsive move, and this is a rule, at least one wave needs to be extended. Now the extension goes normally to at least 161.8%, and you already know this because we covered that in the Fibonacci expansion chapter. So if you identify an impulse, or if you're looking at a move that might be an impulse, what you should do, you should try to check if the rules are being respected. For example, this is a Great Britain pound US dollar 4-hour chart, and first, you want to take a look at this move from the lows. So first, try to mark your low like this in order for you to know all the time where are you standing, and the moment that you're starting the count. And from this moment on, you might say that this is, remember, we are looking for a sequence, 5 waves up in a sequence, and you might say that this is wave 1, okay, and then correct it with the second wave, like this. Now in an impulse, in order for a move to the upside to be an impulse, at least one wave needs to be extended. There is to be higher than 161.8% of the previous wave. So if you're looking for an extension, the preferred way for an extension to take place in a wave, it is in this order. Well, the third wave, it is most likely to be extended. Then the second most likely to be extended wave, it is wave 5, so the 5th wave. And then the first wave. The first wave can be extended, even if this looks a little bit crazy, but it can be extended when price is forming something like an ending diagonal structure. And in that kind of a structure, the first wave is the longest wave between the 5 waves. So in here, you are looking first for the third wave to be extended. This is probably the third wave. And in order to find out if it is higher than 161.8 out of wave 1, then you should go to the Fibonacci tab that you already know from the recording. It said Fibonacci, and let's take expansion, and you should click the low in here that you are looking for, then drag the Fibonacci expansion tool towards the end of the first wave, and then to the end of the second wave like this, and then you are looking for the extension, and take an arrow and put it exactly on the 161.8, and this is your value. So your value for the 161.8, it is 151.58 for Great Britain pound US dollar, and the high in here for this candle was 151.76. So there you go, the third wave to the upside, it is being extended more than 161.8 out of the first wave, and there is this first rule of an impulse, it is being satisfied. Now, if this is 1, 2, 3, then you also need to know that in an impulse, the fourth wave should come like this, and the normal retracement for the fourth wave should be between 38.2 and 50% retracement calculated by taking the low and the highs of the third wave in here. So we should delete the expansion tool because we already know that one wave is expanded. So what we should do in order to see if this has the clear retracements for a fourth wave, then we should go and take a Fibonacci retracement tool from here, going from the end of the second wave to the top of the third wave in here, and we are seeing that actually the 38.250% area that we are looking for is exactly the area, the retracement area that wave 4 actually failed, and then we have a nice move to the upside in the form of the 5th wave. Now this whole structure in here it is being called an impulse. And while on a higher degree, for example, keep in mind this is a 4-hour chart, but on a higher degree, for example, this might look like only an impulse and then the move to reverse to the downside. But in here, on this lower degree, this might be a 1, 2, 3, 4, 5, and this entire move to the upside to be only one leg, so wave 1, okay, of a higher degree move, for example, like this wave 1, okay. One more thing to know about impulsive moves is that when you're looking at the corrective waves within an impulse, there is the second and the fourth wave. Look for these two waves to alternate, meaning to be different in terms of time taken for the price to make the consolidation. So this time taken on the fourth wave in here should be different than the time taken on the second wave in here. So to alternate. Look for the shape to alternate. If, for example, the second wave it is a flat, look for the fourth wave to be a triangle. If the fourth wave it is a triangle, look for the second wave to be a zigzag. If the second wave it is a zigzag or a double zigzag, look for the fourth wave to be a flat or a common flat, an irregular, or something like this, or an irregular triangle or an expanding triangle. So this is important. And one more important rule to keep in mind when you talk about impulsive moves is that in a sequence, in a 5-wave sequence that might be viewed as an impulsive move, the third wave, this is the third wave, can never be the shortest one. So if you have a count in which the third wave is actually the shortest one, then there is wrong. This is not allowed, and this is not forbidden. So there you go. You have in here 1, 2, 3, 4, 5, and this might be only the end of the first wave of a higher degree. Now this first wave of a higher degree might be just the beginning of an impulsive move to the upside, or a leading diagonal, or an ending diagonal, or something like this. Each wave in here, this is a 4-hour chart, and each wave in here, 1, 2, 3, 4, and 5, each wave out of these 5 waves are being formed on a lower degree. So if you go on a 1-hour chart, on a 30-minute chart, on a 5-minute chart, on smaller, it is being formed of smaller 5 waves up, 3 waves down moves on a lower degree. For example, in here, for this 5th wave to the upside, this resembles like an ending diagonal. So what you should do, you should take a text from here and just say that this is a 1, like this, a 1, and make it of a lower degree. Let's make it, for example, 9, okay? Make it blue so that you know that it is a slower cycle, so 1, and this normally should be a 2, so the second wave, the third wave in here, or the third wave in here, it depends on the expansions, okay, and the type and the structure that you're looking for. So the third wave, the fourth wave, and then the 5th wave to the upside. And this is being called 1, 2, 3, 4, 5 for the 5th wave. This is being called the rising wedge. Now you already know the structure from the recording on the rising wedges. And there are small 5 waves to go to the upside to complete wave 1. So the same structure in here, the same structure with 1, 2, 3, 4, 5 has the third wave. For example, the third wave is being formed out of 1, okay, of a smaller degree, 2, 3, 4, and 5. So this is an impulsive move. Wave 1 is an impulse to the upside, and from this moment on things start to get complicated because you don't know exactly what's what's the cycle that this wave 1 red is on. So what to go from this recording is try to think of an impulsive move as a sequence of 1, 2, 3, 4, 5 waves to the upside. At least one wave needs to be extended. The preferred order for the extension is that the third wave it is most likely to be extended, then the fifth wave is the second most likely to be extended, and then the first wave is the third most likely to be extended. Look for the principle of alternation to be respected between the corrective waves, namely between the second and the fourth wave, and also look for the third wave not to be the shortest. Okay? That's the basics of an impulsive structure. For more details or for more look into this theory, I would recommend in the text that accompanies this video, I would recommend the Robert Ballan book. It is being called Elliott Wave Principle Applied to Foreign Exchange Markets. And even if it is an old edition from 1989, the principles, the shapes, the triangles, the proportions, the Fibonacci retracements and so on, and levels are explained with clarity, easy to understand. So take your time, have fun, and I hope you will enjoy this theory as much as I do. Stay safe out there on the market until next time.